I think Meteor has the potential to be one of the biggest airdrops of this year. And in this video, I want to show you several strategies that you can use to farm it. What I believe is the holy grail of liquidity providing with the minimum amount of risk. And I'm going to talk to you about some of the basics. We're not going to cover like the very, very beginner stuff. I'll link a lot of resources that you can use, but I'll just tell you like the entire type of approach that I'm having to this and why is it so important and why am I so bullish on this project overall. First of all, let's start here with some data on Meteora overall. And the one and most important that I want you to look at this is this, the unique users in the past 30 days. And as you can see, the number is hovering around 100k users. And this might sound like a lot to you, but it's actually not that much, especially when it comes to farming airdrops. Specifically for this, like Meteor is quite difficult, I would say. You need to have knowledge, you need to be able to invest time, you need to understand how Meteora works itself, and then you need to have basics understandings of technical analysis and so on. So it's quite a complex project to just farm and not completely lose all your money, because there are high risks for this. But it's very appealing for me because of this number, like only 100k users. And since we're in a bull run, and since for me Meteora is similar to Jupiter, like the importance of the ecosystem is that big, I'm putting more effort. I thought this will be quite late because I started farming it the beginning of this year, and I thought I'm quite late to the party because this project has been out pretty much since 2023 or something. But I think it's not that late, honestly, and I think it's worth it mainly because of this metric. And as you can see on DeFi Llama on the Sol ecosystem, it's in the top 10. Currently, it's at number 8 with 1.4 billion in total value locked. And this really shifted gears with the Trump launch. And they did an amazing job with providing liquidity and generating fees. You can see here the massive gain in liquidity that they had with the Trump launch. It was very, very well executed, and it just shows you like the professionalism of the team and just the product. I think it's really good overall. So let's go over some of the stuff. First of all, you will see here that I have a document. I'll have all these linked down below. But there's a document from Meteora itself with the resources, wikis, useful tools, and so on. So we're not going to use all of them. We're not going to show you all of them right now. But just keep in mind that some of these tools are not 100% accurate. For example, the dashboard, which is lp4fun.verso.app, is showing you in real time if you're in profit or in loss on your liquidity providing position. However, the best way to record it and to be 100% accurate is if you do just simple math on a piece of paper or wherever. So for example, if you provide one SOL, and you get some in fees, some in other currency that you're providing liquidity against. And these two don't 100% calculate it correctly, but if you just write it down, if you want to check and follow your P&L, I think you should do it manually. But these are all quite good, but not great. So just keep this in mind. And then there's the Meteor YouTube channel, and more specifically, the January day 1 bootcamp. You can see it here, and the day 2. I think if you're just starting, because I told you like we're not going to cover basics that much. If you're just starting, I think it's worth watching those 2 videos, and I'll link a bunch of information also on X if you're a reading type of guy. Okay, so what is exactly Meteora? You can provide liquidity pretty much, but I think the game-changing thing here is that when you click on a pool, obviously you can choose the different pools. We're going to discuss this a little bit in just a second, but if you just click on the pool, I think the main benefit and the best thing about Meteora is that you can add a position which is one-sided. So I can just add Solana and I don't need to add USDC here. And it's very flexible on the range that you will be providing the liquidity to. And I think this makes it a very powerful tool just for liquidity providing purposes, even if you're not trying to farm it. But even like while you are watching this video, I want you to really hard think about why exactly you'll be using Meteora, because there are many different ways, many different strategies to use them. I'll talk the ones that are more specifically for like the farming of the airdrop, but also how I would personally use it daily on the type of engagement and trader that I am. But I know there are people that use all the tools and find the pool that is currently with the most APR, like this one, for example, Jelly. As you can see here, there's a pool that is offering like between 40 and 50%. This is daily fees. So if you play this right, you can really make huge amount of fees on liquidity providing. But if you don't make it right, you'll probably lose a lot of money to impermanent loss. And we'll discuss this a lot in detail, but I am not personally using it this way. I'm not trying to find the next little shitcoin that is gonna pump and it's gonna generate me a shit ton of fees to qualify for an airdrop or to make money this way. I think it's quite risky. I have a little bit of a different strategies. So if you, for example, this is the number one strategy that I was considering. I have switched from it, but we're still gonna discuss it. So if you have Solana, for example, laying around, or stable coins that you have undeployed, you can deposit them into so-called stable pools. For example, Jito Sol is pretty much so if it comes out, there it is. This is pretty much a stable pool, and you can see here the volume that it's trading. It's about 10 million in the last 24 hours. And it's important whenever you see like whatever pair you decide to choose, you need to check which one has the highest volume, or stick to the top 2 or 3, because you can see these have different parameters. And what you should do is just track the volume and TVL and stick to the pools that have the highest. And if you click here, pretty much, if you have Solana or Jito Sol, which is pretty much the same thing, you can just add the position, and you can just passively farm the Meteora airdrop while also stacking up some fees, which will be very insignificant here. You can see that 24-hour fee here is extremely low because, as I said, this is not of great interest, and they're not paying a lot of money for this pool because it's pretty much a stable pair that doesn't move that much. And you can just deposit so that you have laying around and you don't want to risk, and maybe this will help you qualify for the airdrop. I've deployed the strategies until like a week ago on stables, but now I've moved away because what happened with Jupiter airdrop, for example, I was having a bit of volume on Jupiter with just stable, so USDC to USDT and the other way around, and they kind of disqualified this volume. So I wouldn't be surprised if Meteora goes down the same way, and if they don't give that much weight or they don't count the liquidity providing that you're doing on those stable pairs. However, it doesn't hurt. Like if you have SOL that is just laying around, I would say just stick it in here, because you could generate some fees, so some return, but also it could be the case that they use also this LP providing for counting for the airdrop. And keep in mind that how the point system works is that for every $1 of fees you generate, they give you 1,000 points, and for every $1,000 of liquidity providing, they give you 1,000 points. So pretty much you get 1,000 more times the points for fees. And the goal here is to stimulate, chase the high fees and so on, which is a bit dangerous. We're going to discuss this in detail, but just so you can still rack up points if you have high TVL and liquidity providing without generating that many fees. And there's one main strategy that I will use here. And this is the one, as you can see here, you have spot, curve, and bid ask. They're for different purposes. We're going to discuss them separately. But for stable pools, what I use is the curve one. What this basically, let me just add some SOL. What this basically does is it tells you that the line here, this means this is the price right now. And you're providing most of your liquidity, whatever that is. In this case, it's like almost 2 SOL. You provide most of the liquidity within the closest part of the range. And then as the price goes out of it, you'll be providing less of the liquidity. And on stable pairs, this is what you want, because technically, on a stable pair, all the liquidity should be here. There shouldn't be big swings with this, because, for example, if something happens to USDT and they depeg from USDC, okay, this will be a lot more volatile, but technically most of the time it's between, not even a percent. Look at this difference. It's like 0.09% up to 0.1% if you use the maximum range on this. So it's the best way, because this way the most of your liquidity will be used in here, and you will be able to make most on fees, although it will be still very low. This is a way to maximize fees. And for example, during the Trump thing, what I was doing is I was doing the USDT, USDC pool. And because the pools of Trump were USDC based, not USDT, I stacked up quite a bit of fees from my USDC that I was providing here. And at the end of the day, I was in a tight range, and I was providing liquidity in a tight range as I described. And all of my USDC got swapped. No, sorry, actually the other way. All of my USDC got swapped for USDT because there was a high demand for USDC. And I was stacking fees on this pool specifically. But as I said, this is relatively safe. If you have just coins laying around, you can use it, but there's like 50% chance, in my opinion, that they might not qualify this for the airdrop. So I'm currently personally avoiding it. Another strategy which I deployed with Trump, and a lot of people did this, is DCAing out of a position. So for example, on Trump, so you can see here there are different pools, so you need to be careful. Usually they're always sorted by the 24-hour volume. In this case, it's Trump SOL or Trump USDC, and there's a big difference here which you choose. On Trump SOL, because there's such a huge demand and so much volume going on with this one, I'm just going to choose one pool here. And you can see that as price was going up, and if you bought, let me jump to the chart so we can see it clearer on the chart. As the price of Trump was going higher, what happens here? Just so you understand a little bit better. Let's say you bought somewhere here, and price moves into here, and you basically can provide liquidity with a certain parameters in this area right here. And this means that basically you will be DCAing out of your position of Trump. And at the same time, you will be generating fees from the people that want more Trump as the price is going up. This is really cool if you want to not overthink when you are exiting a position. But it's also really bad if you want to have big runners for much higher prices. Because, for example, if you bought here at, let's say, 1.5 billion and you sold all of it at 5 billion, yes, you made like 3x, but the price went to like 15 billion. This is not fully diluted. This is only circulating market cap. But in the price, let me just put this in price so we can see it a little bit better. I think you get the point. But let's say you provide a liquidity from $5 to $10. The move was to $50. So the risk here is that you lose on the gains. You stack up on some fees, but you lose on the massive gains. And for the few hours, I was personally providing liquidity between, I don't remember exactly, but I think it was somewhere in this area. So I bought at like 15 when I woke up, and up to 30. I was providing some liquidity up here in the 30s, and I stacked up like 10% return for a few hours, 10% on the entire position. So not only I was gaining on the appreciation of Trump as price, but also on the fees, and I stacked up like 10%. So this varies a lot, but this is a strategy to deploy. And if you have a situation like this, or maybe you got an airdrop and you want to again DCA out of your position, I think this is a great tool. Magic Eden was another one. So on Magic Eden, again, this is what happened once it launched. This looks terrible on the daily, but on the 1 hour, you got you know, for example, this period here, which was great for liquidity providing, where price was a lot more stable. Or like if you wanted to DCA out, you just stuck it here, and maybe on this pump up, you got the move on the higher up. And then you got to be quick on the trigger, because if you don't, if you still are in the pool, then as price collapses, you obviously be buying back the magic eden. So you got to be careful, and that's why I said, you know, this requires time. And the strategy for this that I deploy, and I'll show you how I do it for also for farming, is that I use the bid and ask mostly if I want to DCA out of a position, because bid and ask allows you to basically do, again, this is the current price here, and I will be selling more of my token as price is going higher. So in this case, I'm not showing you the exact correct example, because let me just go to a pool to visualize this properly, so you don't get confused next time. So on the SOL USDC, technically, if I want to DCA out of SOL, I'll add a position, I'll add my SOL, whatever, and I will choose bid ask strategy. And as you can see here, as the price moves up, I will be selling more and more. So this is a specific pool from the price here is 236 to 251. I'll be DCAing out of the position, and you can see here below what's the price range you're covering pretty much. So 235 to 220, 252, 7% move. And this is because there are some limitations to Meteora in general. First of all, you can use 69 bins only. And this, what a bin means is that the step, so as you can see, there's a bar here. Every step is a little bit different price from the previous one. In this case, higher than the previous one. And you can judge this by the bin step here. So a 10 bin step is very, very low. I don't know what's this in moves, but let's just see here. So 236.2, and the next one is 236.4. So you can imagine this is just a 20-cent move on the price, and you can get only 69 of those moves. There are different bins. For example, on SOL will be less so, but for example, this is a 50-step bin. So if I want to DCA out of the position, maybe on higher prices, maybe this will be a better pool for me, because I'll add bid ask. And as you can see here, this captures a 40% move. And sometimes there are much higher bins. Like for example, on these popular pairs, like the top pairs, you get such kind of bins that are with smaller steps, because, you know, people expect this to be less volatile. But if you go into a shitcoin, there will be bins of 100 or so. Let me show you, and you'll see exactly what I mean. So this is a 100-step bin. I've seen pools with 400, for example. And if I want to use this bin, I capture 49% of the move. So you can, you know, see the difference here. But just keep this in mind, because, for example, another way and another strategy that I use it for DCAing, I have a position, let's say, of Jupiter laying around. And on Jupiter, I will go to Jupiter SOL, and I'll choose the highest bin possible, so that has some volume. So in this case, the 100-step bin doesn't have that much volume, just 1.2 million. While the first one is a bin step of 80, so almost as 100, but it's got a lot more volume. So I'll click here, and since I have Jup, I'll add my position here, and I'll add the maximum that I have, and it will cover 72% move. So for me, that's fine. I can DCA out of my Jupiter with the bid ask strategy, and most of the sales will be above 60% gain from the current price. You know, and again, you need to calculate what's your average cost if you have those positions. Are you okay of selling the entire position at 70% gain? Maybe you don't want to do this. Maybe you want to put like 1/3 of your Jupiter here and just leave the others for a moon back and add more to Meteora to DCA as the price is moving in your direction. Because technically what you can do as well, let me find the chart here on Jupiter, is that you can be adding or removing liquidity constantly. And this is what you're going to be doing anyway, because it's not a passive. This is not that passive. of a play. But what you can do is, for example, you can provide some liquidity for this move, and then provide some liquidity for this move, and stack it up as price goes and moves in some direction. So this is a way to DCA and use like more passive long-term funds to farm it. And this one is, you know, it needs just for a little bit the price to move in your direction. And I'll give you a very specific example here, because I'm doing the jupe thing, as I mentioned. I put my jupe somewhere in this area, and I said, okay, I want to be allocating all of my Jupiter, and I'm expecting if this moves up, which it doesn't always move up, I expect to be fully out of the position at around $2, let's say, almost 70%, or a little bit more. So somewhere in this area, I want to be fully out of Jupiter if it makes the move. Yes, I'm taking a risk, because if this thing breaks out, you can pretty much lose some money if you sell at $2 and it just keeps going. But in this case, I've calculated my risk, and I'm like, okay, I'll take the profit, and probably if this moons, there will be some consolidation pattern, and I can still buy back into it as a separate trade, you know, and not overthinking, and again do the same game with Jupiter. Or you can even do another strategy, which is DCAing into a position you like. For example, even on Jupiter, let's say I don't have Jupiter, but I believe it will come down here, so I can put my SOL to work from here to here, and let me show you how this would look on Meteora. So here I have my SOL. I want to use the bid-ask strategy for DCAing into a position, and I'll see here it's 40 minus. I'm covering 42% of the scale, so I'll have most of the buys into Jupe in this area right here. However, I need to go back to the chart, and that's why it's important to understand the charts and everything. Like from here, where the price is right now, to the bottom of this range, where I believe a bounce could occur, is 28%. So I want my range here to be up to, let's say, 30%. And that's it. And now this is how I would set it if I believe price will retrace, and I want to have Jupiter. That's very important, because if you don't believe it, like, why would you be DCAing into this level at all? The risks here, like on the plus and on the minus side, as I said, is that imagine this: you make the move, the token makes the move, and you have a bunch of Jupiter here. However, price starts moving as you expected the other way around, so it starts pumping back up. And if you don't remove your liquidity from the pool, you'll be again back to SOL, because there will be more demand for Jupiter as it's jumping back in price, and you'll be selling most of your Jupiter based on, you know, the way you provided liquidity in this section right here. And I think it's very important to understand this, and this is why it's very active, this entire game. So what I will do is try to close my liquidity providing here, and I will try to flip it. So the next thing I will do is put all my Jupe on a same strategy, but this way, this means that I'll be selling the majority of my Jupiter at the top of the range, for example, here. So I'll be averaging here in this area around 60, 70 cents, whatever. And then I need to flip the pool and also DCA out as the price I expect to go up is going up. So I'll be stacking the fees, and I'll be selling at the highest price. So this is the best way scenario to play out the DCA in and out of the strategy. And you can do the same here. Like, as I said, if you have a big pump, you sell all your Jupe, you close your position, and then if you believe the market will flip, you add back your SOL that you gained from the position and DCA somewhere lower. And if you decide to do this, this is another like strategy that you can use, but I think it's a bit more complex. We're going to get into a little bit less complex strategies, but I think you understand what's the benefit of these two strategies. And like the two examples I gave you here, I wouldn't only use for like airdrop farming this thing, but just as a strategy long term, to milk a little bit more return on my investments that I believe will go up, and I'll get another 10 or 15% or whatever from the fees that this thing is generating. So we're talking about strictly about the airdrop, like if this is the goal only to farm the airdrop. There are a few other ways to do this, and one of them is find a coin that is just doing nothing basically. And I'll give you good and bad examples for this. The ideal scenario for liquidity providing is something that doesn't move that much, or it's in a tight range. And I made quite a bunch of money on this here. I'll show you. So Apple here is a meme coin. It had a bit of a run here, and then it started dying out. And while if you're just gambling on shitcoins, this chart looks terrible because there was a pump, and then if you decided to start averaging down on it, it was down like 90%. But this is great for liquidity providing down here because this took several days to play out, this kind of consolidation, and there was still volume on this token. As you can see, currently now the volume is down, and so the fees are down, and you might argue that this is also a range here on this thing, and you could play this range as well, but there was a lot more volume here compared to what we have here, and that's what made it like very, very good for liquidity providing. And what happens here is that as price moves, and of course it depends where you buy and what you buy, because what I was doing here is pretty much, I don't remember the exact point, but I bought some Apple and I bought some Sol, and I provided two-sided liquidity here. And this means that I'll be capturing the move on both sides. So if it goes up, I have Sol, I have Apple to sell, and if it goes down, I have Sol that it will buy me more Apple. The risk here is that this keeps going down, right, and never recovers. But you know, maybe I got lucky on this one, but it was also a good setup on the chart, and I just kept my liquidity for quite a significant period, and only from the fees, like the position doubled, not even considering the appreciation that there was, and this is perfect, as I said, when the token is ranging. And what you can do here, let me go back to Meteora. So what you can do here, and let's go to Apple, and I'll show you why I don't think it's such a good token right now, but let's just use it as an example. So I'll go to Apple Sol, and first of all, you can see that nobody's trading this already. It's like $2,000 in volume with TVL 20,000. So this is not a pool that I want to be part of, but just for the sake of the example, you can see here, because this is a lot more volatile, the bin step here is huge. It's like 250 for the one that has some TVL. Again, very tiny TVL, but just for the sake of the example. And what you can do here is, if you decide that you want to provide two-sided liquidity, you go to swap, or you can swap on Magic Eden or whatever else, but you can do it here. So technically I can swap half of my Sol for Apple, and let's just do some. I'm not gonna put all the money, but let's just do some, and obviously you need the transaction to go through, and then I can add a position that in this case it's primarily for farming, and I want it to be in a specific range that I'm interested in for farming, and I can do autofill here. If you click autofill, it will tell you, like, it will provide pretty much equal sides for both pairs that you're using, and then you can play around again with this. So this is capturing 69 bins, and it's covering like minus 56% to plus 131%. These are quite big swings. So what you need to do is, again, go back to the chart and see, like, where is the area that you want to do business with, and where not. So in this case, in this chart, I would say you don't even need to have Sol in the pool, because the theory here on the chart that I see, this is lining up very, like, importantly with the liquidity providing. The theory here is that this level needs to hold, and if this holds and I have just Apple and it bounces from here, I need to cover like the top of the range here, so 60%. But for the sake of the argument, let's say you want to provide two-sided liquidity, on Apple, and what you would do is you can use the simple spot way, because this way it distributes equally the liquidity on both sides, and you can manage, as I said, which percentages you want to give. So the top of the range was around 30-40%. So I want to have most of my liquidity here and make sure that, you know, I'm closer to the price with bigger bins. This means I'll be generating more fees. And you can do this for stable pairs, which are not that easy to find, by the way. And I'll give you a couple of examples. So this is another way to do this. And just a few days ago, I was doing Grift because I was like, Grift looks like it's at a level that it might start slowing down. So there was a range. We faked out on the top, got to the bottom. We bounced from this level. And I was like, okay, maybe here this thing starts to stabilize and establishes a range. So what I did was I bought some Grift, just Grift because it's at the bottom of the range. And I provided as liquidity. And I said, okay, I want to be in a pool that is like 100% up. So I will try to find enough bins. And on such a token, it's easy to do this. And I'll provide all my Grift for this entire range. And then if it plays out, obviously I'll be making a shit ton on the fees and on the price appreciation. And if it doesn't, I will be risking, and that's very, very important, I will be risking only the price depreciation of Grift. And this is kind of limiting my impermanent loss. Because if I have a two-sided position at such a level, same with Apple currently that I told you it's not a great moment to provide two-sided liquidity, what happens is that the Grift you bought here, let's say, is going down in value 35%. However, at the same time, your SOL that is at this price right here is turning into Grift because you're buying more Grift because people are swapping Grift for SOL because SOL is the better asset in this case for the moment. So your SOL that you're providing will also be going down in value, and this will cause the impermanent loss. And these are very nasty. You can very easily lose a lot of money. And just for example, I cut this, I was doing only Grift, so I didn't put any SOL, and I lost like 5 or 6% of my LP here just for a few hours when they started breaking down, and I closed it obviously. But these are the dangers. Same with Trump, by the way. And I was like, okay, this seems to be like a tight range. And actually, Trump right now, I don't think it's a terrible place to start bidding for liquidity providing. Because if this level holds, you just buy Trump like you would for a trade. It's only 3 to 4 or 5% risk. So you're risking this much. But since there's interest in this token, and the potential for it to go to the top of the range somewhere here, it's like 18%. So what I would do, and let's do it together right now because I want to show you another strategy, is first of all, I need to get rid of this Apple. So I will sell it back into SOL. And what I will do is find a nice Trump market. Trump SOL, and I will choose the one again with most volume. The fee here is not terrible. Maybe you want to use the smaller bin step, but again, this means that there will be less bins you can put your money into. But let's just choose the first one. And then what I could do is I would swap, let's say, one SOL for Trump. And whenever you generate a one-sided pool, there will be there's like 0.05 SOL that you'll need anyway. They will be returned back to your wallet, but just so you know. And what I would do is go to Trump, one-sided liquidity. I will do the bid ask. I'll do the bid ask. Insufficient SOL balance. Okay, because it's out of field. I don't want to provide any SOL because we're at the bottom of the range. And this is a 7% move. So this bin is a little bit too small for my likings, but it has the most volume. It will cover just this range here. So again, this level is not terrible, honestly, as a first level of interest. We gotta reclaim this. So you could close the pool here and see what happens, and then rebuy some Trump, maybe at a higher price or something, and then do the same again. Or if you believe this will become the range, then like somewhere here in the middle at 27, you could provide two-sided liquidity and play the move, right here. And you can provide this. Another way to do this to maximize kind of your fee generation for farming is do the half of Trump with the bid-ask strategy, so you capture the move with higher prices, and then do the other half with a spot strategy, which will pretty much have most of your Trump spread out equally, and this means you will start generating fees sooner rather than later in the price range. And let's do this. Let's just do it live. So I'll add liquidity here. For the maximum range, I want this to start from current price. It's a 7% move, so I'll add half of my Trump here. And then I'll add the other half on a bid-ask strategy for, again, about 7%. And you can see that it approved, and now I have these positions open. So now what would happen if this starts dropping here? I need to cut out the position and take the impermanent loss, whatever that is, only on the price of Trump. But if it starts moving, and that's the best part, like if this moves just a little bit and stays above your entry level on the pool, it starts generating fees right away. And if price moves, where's the drawing tool? Keep forgetting it was here. And if price starts doing this right here or somewhere here, this is perfect. This will be perfect because you're in the pool, in the range of the price that you want to be, and price will be moving gently, and it will be generating a lot of fees, which you want for the farming of the airdrop. And sometimes it could get out of the range, and you have this type of signal that it tells you that it's out of the range, as you can see here on this one. And this means that pretty much you're not earning fees. You're still providing the liquidity, but you're not earning the fees. And what you can do is, obviously, if you still believe in your thesis, you can close the position and re-enter again, because technically now, if the price, like I bought somewhere here, and if price goes down to here, this means that I will be out of the position and it won't be generating fees. So maybe, I want to buy back a little bit, re-enter the pool a little bit lower, or just let it ride, because sometimes obviously it will fluctuate a lot, especially on volatile tokens, and it will go back in out of the range. But the moment this holds and gets back in the range, this is the perfect spot, I would say. However, for example, I provided some liquidity the other day and it was in this range, and my thinking was exactly the same like here. However, chart broke down, I sold the Trump, so now I'm just waiting for the setup, which I believe could be this one here. And you can go over as many charts as you wish. There are a lot of shift coins. We looked at Grift, somewhat of a decent project. I would strongly advise not overdo it. You can look at some other big projects on Solana to do this, like Giro. Giro, I think, is also a great token right now to provide some liquidity, but not the best, because the best I'm going to share with you in a bit. But you can see here a clean breakout potential. So what you could do, you can play it two ways. Just try to DCA down into it, and if it just starts breaking out, buy some Giro and DCA it up to this level, for example. So you generate fees, you make some money from the price appreciation, but most importantly, you're in the pool and you're in the right range. I think there are charts out there that do this, but you need some work. You need to do some work. Look for the charts, look at the bin steps, all these things. And I shared with you already a few strategies that you can deploy in order to do this. But what I believe is the best right now, if you're just farming and you don't want to take too much risk, by far for me is GLP, and more specifically GLP USD, because I don't know if people are familiar with this product, but this is pretty much the Jupiter Perps liquidity provider token, and you generate fees, and they use these fees to burn, or I don't exactly remember the mechanism, but basically the whole thing is designed to go up and to the right. because they buy back with the fees that they generate from the platform. They buy back some GOP, and this pushes the price higher. And as long as Jupiter is making good profit and this thing looks good, I think it's a decent bet. And I've been playing with this since like $3, and as you can see, the price appreciation compared to some other tokens is not huge. However, it's very stable and it's still going up. Think about all the fart coins of the world that go up and down, and even Trump and all the others. Just look at this chart. It's looking amazing. And I think it will keep going up like this. Yeah, you could have some swings, but if you enter at the right moment, like I believe I've done so, because after the Trump pump, Jupiter was making a lot of money, and now as you can see, it's correcting, and now potentially this could break out into new highs. And what I've done is I bought a bunch of GOP, put it in the USDC pool somewhere in this area. So right now I'm in range, and if this just keeps moving slowly and slowly like it has done for many months, that's perfect for liquidity providing. And this is not a stable pair. It's got good premium, good fee generating. Let me just show you the stats on GOP. There's one caveat here that I want to also show you. It says 0.07%, but I don't know why I think it's generating more, honestly. But if you use this and you can add some liquidity, I think it's not. This is 24-hour fee, so just keep this in mind. I think it's very, very decent, and you can go with heavier size. What I would avoid is putting this against Solana, because the Solana chart is a little bit different, and that's very important to always look at the pairs that you'll be providing to each other, like not some other chart. Like I will be providing GOP USDC because I'll be playing with some stable coins, as I mentioned. But the GOP SOL chart, this is not a proper chart. GOP Solana. Let me find another one. I think this should be a better chart. There you go. This could look a little bit different. And let me just click on the SOL pairing. Here we go. So this looks very, very different. Again, not terrible for liquidity providing because it's ranging, but the moment Solana starts moving up, this will get blown out and you will be out of the position pretty much. So you will have only GOP and not Solana, because everybody will want more Solana because it will appreciate more. And this, I think it's quite a bit more volatile compared to the USDC pair. So I personally prefer the USDC pair and play it with some stables that I just don't use for trading. But you can do whatever you want, of course. But just make sure you look at the right chart. Whew, I think that's it. Let me just quickly go over my notes, see if I'm missing something. No, it's complex. It's time consuming. You need to get in and out of all kinds of pools all the time. But I think it will be worth it. And I think this could be a big airdrop at the end. So if you have any questions, let me know.